This whole BluSmart thing, it really does feel like a business thriller, doesn't it?
Yeah.
You have this upstart trying to take on the giants, Ola and Uber, right in the heart of India's ride-hailing market.
Yeah, I mean, it's a bold move for sure.
And they weren't just trying to fit in, they went all in on electric vehicles. A whole different approach to working with drivers and this big emphasis on sustainability.
Definitely from the start, they wanted to be seen as the eco-friendly alternative, and that resonated with some riders for sure.
It did. They carved out their niche first in the Delhi NCR, that's the National Capital Region,
Yeah.
and then expanded to Bengaluru.
Right, kind of a classic underdog story, but with that modern electric twist.
Exactly. But now as we look at early 2025, things have gotten a lot more complicated for BluSmart.
Yeah, some real twists and turns.
So that's what we're digging into today, a deep dive into what's really going on with BluSmart, and we've got a ton of information to work with.
We do, and it's going to be fascinating to unpack it all.
So we're talking corporate structure, their financials, the day-to-day challenges they face, and of course how they stack up against that fierce competition.
It's a wild ride for sure.
We're going to break it all down for you piece by piece, all the key insights in one place.
The shortcut to understanding the crucial parts of BluSmart's story right now.
Okay, let's jump right in. One thing that's been making headlines is the relationship between BluSmart and this company, Gensel Engineering.
Right.
What's the connection there?
Well, the thing is, these two companies are incredibly intertwined. First off, they have a shared promoter, Anmol Singh Jaggi.
Okay.
And he's not just a co-founder of BluSmart, he's also the chairman and managing director of Gensel Engineering.
Uh-huh. So he's at the top of both companies.
Exactly. And that connection goes beyond just shared leadership. We're talking about Gensel essentially being a primary source for BluSmart's vehicles.
Okay, I mean, when you say primary source, how big a part of their fleet are we talking about?
So by early 2025, estimates suggest that something like 4,000 to 5,000 of BluSmart's EVs out of a total of about 8,000 were actually leased from Gensel.
Wow, that's a huge chunk of their fleet.
To put it in perspective, BluSmart represents over half of Gensel's entire portfolio of leased assets.
So you can see why this close relationship has raised some eyebrows.
Definitely.
I mean, when you have the same person essentially on both sides of a major deal like this, it does bring up concerns about corporate governance, right?
Yeah, I mean, it definitely raises questions about potential preferential treatment and financial entanglements.
Right. Are we really talking about arm's length transactions here, or is there something else going on?
The core issue is whether BluSmart might have gotten a better deal from Gensel than a completely independent company would have, simply because of that shared ownership.
And there's been some chatter about that, right?
Oh, yeah. There's an observation out there that basically says BluSmart gets a sweet deal on pricing because they're such a great customer for Gensel.
And in terms of corporate governance, that's not exactly a glowing endorsement, is it?
Not really, no. It does raise some red flags.
And then things got even more interesting in January 2025.
Oh, yeah. Tell me about it.
Gensel's EV leasing arm decided to sell off about 3,000 of the EVs that BluSmart was actually using.
They did, and those went to another company called Refex Green Mobility.
And what was the motivation behind that sale?
Well, Gensel was trying to reduce its own debt load. It needed cash and fast.
So they're essentially selling off assets to cover their debts.
Exactly. But then fast forward just a couple of months to March 2025, and things take a turn for the worse.
Yeah, big credit rating agencies, ICRA and CARE, downgraded Gensel's credit rating to basically junk status.
Ouch.
And the reason? Gensel was having trouble keeping up with his debt payments.
They were delaying payments, and that obviously spooked the rating agencies.
And the markets didn't take this news well either, right?
No, they didn't. Gensel's share price took a huge hit, reportedly dropping over 60% since the beginning of March.
So now they're scrambling to raise even more capital to deal with these debt and liquidity issues.
They are, and it's not a good look for a company that's supposed to be a major player in the EV space.
And this all circles back to BluSmart, doesn't it?
It does. Their main vehicle supplier is now facing serious financial problems.
What does that mean for BluSmart's ability to keep its cars on the road, and even more importantly, their plans for expansion?
Well, it's a big question mark. If Gensel is struggling to stay afloat, can they really keep up with maintaining those leased EVs?
And what about providing new vehicles for BluSmart's growth plans?
That's even more doubtful, right? So yeah, this reliance on a financially shaky partner is a major vulnerability for BluSmart.
And the financial ties between the two go deeper than just leasing vehicles, don't they?
You're right. There's a lot of talk about Gensel essentially propping up BluSmart financially.
What kind of numbers are we talking about?
Well, reports say that in fiscal year 2024 alone, Gensel spent over 500 crore to support BluSmart.
That's a lot of money.
It is, and that includes a whopping 148 crore in loans specifically to BluSmart subsidiaries.
So it wasn't just about the cars. They were directly funding BluSmart's operations.
Exactly. It shows just how entangled these two companies really are financially.
So putting it all together, what's the big picture impact on BluSmart's ability to function and grow if Gensel is in this much trouble?
I mean, it's a pretty clear threat to their operations, right? If Gensel can't afford to maintain the existing fleet, BluSmart's service quality could take a hit.
And forget about expansion. If they can't get new EVs from Gensel, their growth plans are in serious jeopardy.
Exactly. Their whole strategy is built on having a large and growing fleet of EVs, and that's all in question now.
Okay, let's move on to BluSmart's own financial picture and whether their business model is sustainable in the long run, because on the surface, their revenue growth looks impressive.
It does. They've been putting up some big numbers.
Tell me about it.
In fiscal year 2024, they reported revenues of 376 crore, which is a massive 135% increase from the previous year.
So they're clearly attracting customers and generating revenue.
They are, and their projections for the current fiscal year, FY25, are even higher, around 720 crore.
So at first glance, it seems like they're on a roll, but then you look closer at their profitability, and it's a different story.
It is, despite that strong revenue growth, they've been racking up significant losses.
In fact, their EBITDA margin in FY24 was a negative 90%.
Yeah, and just to be clear, EBITDA is essentially a measure of a company's operating profit before taking into account things like interest, taxes, depreciation, and amortization.
So it gives you a good sense of their core profitability from their operations.
Exactly, and that negative 90% tells us they're spending a lot more than they're bringing in from their core business.
They are projecting improvements, though, right?
They are aiming for negative 60% in FY25 and negative 11% in FY26.
And their ultimate goal?
To finally reach EBITDA profitability by FY27.
Okay, so they're saying they have a plan to get there, but even with those projections, they're still burning through a lot of cash.
Absolutely.
How are they funding these ongoing losses in their expansion plans?
Well, so far they've been successful at attracting investment. They've raised about $200 million to date.
That's a lot of money. Where's it coming from?
It's a mix of equity and long-term debt specifically for growth, and they're not stopping there.
So they're going back to the well for more.
They're currently trying to raise another $25 million.
Okay.
And they've set even more ambitious targets to bring in over $300 million over the next 3 years.
Wow, they're really going all in on fundraising. But even with all that cash coming in, there have been reports of them struggling to meet their debt obligations.
There have, and that raises concerns about their short-term financial health.
Like what specifically?
Well, in February 2025, there were reports that they defaulted on a 30 crore payment related to non-convertible debentures.
So essentially, they missed a debt payment.
They did, although they reportedly made a late payment later that month.
Still not a good sign, is it?
No, not really.
Not it?
It suggests they might be facing some cash flow challenges.
And we have to remember that their business model of owning or leasing their entire fleet is a lot more capital intensive than what companies like Ola and Uber are doing.
That's a key difference. Ola and Uber are mainly aggregators connecting riders with drivers who own their cars.
Right, so they don't have to invest as much in vehicles themselves.
Exactly. BluSmart's approach requires a much larger upfront investment and constant ongoing expenses.
Okay, so considering all this, what happens if they can't get those new vehicle leases, especially with Gensel's problems?
That's a recipe for disaster.
Yeah.
Their current leases are going to start expiring, and with Gensel in trouble, who knows if they can renew them.
And without those renewals,
Their fleet could shrink dramatically, maybe even below 5,000 EVs by 2026.
less cars mean less rides, less revenue.
Right. Their revenue could plummet to maybe just 10, 12 crore per month.
Ouch. And on top of that, their operating costs could actually go up.
They could by an estimated 18 crore per month.
Why would their expenses increase if they have fewer cars?
Well, they were probably getting some support from Gensel for things like charging infrastructure and vehicle maintenance.
Okay, so those costs would now fall back on BluSmart.
Exactly. And then you factor in their existing debt repayments, it all becomes pretty unsustainable.
Let's switch gears a bit and talk about how BluSmart handles its drivers, because they've taken a unique approach there, too.
They have. It's a pretty significant departure from the typical gig economy model.
So how does it work?
They actually employ their drivers directly and pay them hourly wages.
Interesting. And they also offer incentives based on hitting weekly revenue targets.
Right. Those targets were initially set at around $8,000 per week.
So theoretically, this could be more stable and secure for drivers compared to the uncertainty of being independent contractors.
It could, and in some ways it's a more appealing proposition.
But have we heard any complaints or concerns from drivers about this model?
There have been some reports of dissatisfaction.
What are they unhappy about?
One big issue is the time spent waiting for EVs to charge it eats into their driving time and potentially reduces their earnings.
Okay, that makes sense.
And there's been talk of the incentive structures being adjusted downwards over time.
Which is a common complaint in the gig economy as well.
It is, and we even found a quote from a BluSmart driver who said, "If I get better earnings elsewhere, even at Uber, I will leave."
So they're not afraid to jump ship if there's a better deal out there.
No, they're not, and that really highlights the intense competition for drivers in this industry.
Right, everyone's fighting for the same pool of drivers, and compensation is key.
Exactly. If you don't pay well, you'll lose your drivers.
And BluSmart's system of fixed shifts is quite different from the flexibility that drivers have with Uber and Ola.
That's true. It's a trade-off. Fixed shifts provide more predictability, but less freedom.
Some drivers might value that predictability, but others might really miss the ability to set their own hours.
Exactly, and it remains to be seen how this will impact driver retention in the long run.
Especially since driver churn is a major problem across the entire ride-hailing industry.
It is, and BluSmart's not immune to that.
Plus, there's always that potential for mistrust between platforms and drivers over things like pay and commissions.
Right, drivers often feel like they're getting the short end of the stick.
And if we add in the potential fleet shortages we talked about earlier, BluSmart drivers might start looking elsewhere for better earnings.
Definitely, if they can't get enough rides because there aren't enough cars, they're going to be unhappy.
Now, let's talk about BluSmart's big expansion plans, both in terms of their fleet and the charging infrastructure they need to support all those EVs.
They've set some really aggressive targets, haven't they?
Their goal was to have 13,000 EVs on the road by March 2025.
Ambitious for sure, and they're aiming for 25,000 within 3 years.
So they're really trying to scale up quickly, and they're not just focused on India, they're going international.
Right, starting with Dubai in June 2025 with a fleet of Audi EVs.
And they plan to add Teslas to that Dubai fleet by the end of the year.
So they're going for the premium market there.
They are, and they claim to have already captured a 9% market share in Delhi.
So they're making some progress, but achieving these expansion goals is going to be tough.
What are the main obstacles they face?
Well, first off, they're heavily reliant on vehicle manufacturers, especially Tata Motors, to deliver all those new EVs on time.
Any hiccups in the supply chain could throw off their whole timeline.
Absolutely. And then there's the massive task of building out enough charging infrastructure.
Right, they have around 5,800 charging stations now.
Yeah.
But expanding that to support 25,000 vehicles is a huge undertaking.
It is, and it requires a lot of capital investment, which might be hard to come by considering their financial situation.
Not to mention the logistical challenges of finding locations for all those charging stations and ensuring they have access to enough power.
Yeah. It's a complicated process, and then you add in the operational complexity of managing such a large fleet spread across multiple cities and even countries.
It's a lot to handle. But they are trying to diversify their market presence to reduce their reliance on the Delhi NCR region.
They are right now, about 84% of their fleet is in Delhi NCR.
But they want to bring that down to 48% by 2027, with Bengaluru going up to 37%.
And the remaining 15% will come from other cities they haven't specified yet.
So spreading out geographically is a key part of their strategy.
It reduces their dependence on a single market and makes them more resilient overall.
Now, BluSmart has made a big deal about their environmental sustainability with their all-electric fleet.
They have. It's been a major part of their marketing.
But when you really dig into it, how does that claim hold up?
Well, it's complicated.
MOA.
I mean, on the surface, having a 100% EV fleet for ride-hailing does have the potential to significantly reduce emissions.
Especially compared to using gasoline or diesel-powered cars.
Exactly. Their own data likely shows a substantial decrease in CO2 emissions with EVs.
But what about the electricity itself? Where does that come from?
That's a big factor, especially in India. Well, India still relies heavily on coal for power generation.
So those EVs might be indirectly contributing to emissions depending on how they're charged.
Exactly. It's not as simple as just zero tailpipe emissions.
So what are they doing about that?
Well, they've partnered with Tata Power to source green power for their charging infrastructure.
So they're trying to ensure they're using renewable energy sources.
They are, which is a positive step towards reducing their overall carbon footprint.
But we also have to consider the EV batteries themselves, right?
Oh, yeah. The batteries are a whole other can of worms, environmentally speaking.
From production to disposal, it's not a clean process.
It's not. Making those lithium-ion batteries has a big environmental impact.
Like what specifically?
We're talking water pollution, habitat destruction from mining raw materials, and greenhouse gas emissions from the production process.
So the batteries themselves have a carbon footprint before they even hit the road.
They do. And then there's the issue of disposal. Those batteries have a limited lifespan, maybe 7 to 10 years.
And if they're not properly recycled.
They can leak hazardous materials and contaminate soil and water.
So that's a big concern.
It is. Recycling technology is improving, but it's not yet at a scale to handle all those batteries.
And there's also the issue of supply chain emissions, right?
Yes. Research from Princeton University suggests that refining those critical minerals needed for batteries like nickel and cobalt could create pollution hotspots.
And potentially increase emissions in countries like China and India.
So even though BluSmart's cars aren't directly emitting pollutants, the bigger picture is more complicated.
Their environmental impact is intertwined with the entire EV supply chain.
Exactly. It's not a simple black and white situation.
Okay, let's shift gears again and look at the competitive landscape BluSmart is operating in.
Right, it's a tough market dominated by some really big players.
While BluSmart says they have a 9% market share in Delhi, Uber has a much larger presence.
They do. They have a 43% nationwide market share across way more cities and a far bigger fleet.
But BluSmart's limited to just 2 cities right now.
Right, so they're facing a huge uphill battle in terms of scale.
So how are they trying to compete with these giants?
Well, they're focusing on a few key differentiators.
Like what?
Well, first there's the all-electric fleet, which appeals to eco-conscious consumers.
Right, that's their main selling point.
Then they offer scheduled pickups, which can be more reliable for certain trips.
Okay, and they also don't have surge pricing.
Which can be a big draw for riders, especially during peak hours.
And because they employ their drivers directly, they aim to provide a higher quality of service.
The idea is to have more control over the driver experience and ensure consistency.
But those differentiators also come with their own challenges, don't they?
They do, especially when you're up against companies with such vast resources and established networks.
Their limited scale is a big hurdle right now.
It is. They just can't match the coverage and availability of the bigger players.
And their capital-intensive model makes it harder to expand quickly.
It does. They need a constant influx of cash to keep buying or leasing those EVs.
And managing an all-electric fleet adds another layer of complexity.
Definitely charging infrastructure maintenance. It's not as simple as managing traditional gas-powered cars.
And while BluSmart might believe that Uber is losing ground based on some internal data, Uber says they're actually adding more drivers and vehicles.
So the competition is only getting fiercer.
What about BluSmart's future growth plans? How are they going to try to gain more market share?
Their strategy has a few key components.
Okay, tell me more.
Geographic expansion is a big one, as we've seen with their move into Bengaluru and now Dubai.
Right, they need to be in more markets to compete effectively.
Exactly, and they're also looking at diversifying their fleet offerings.
Like the premium EVs they're planning for Dubai.
Right, they're trying to tap into different segments of the market.
And building out their own charging infrastructure is another key focus.
That could give them a long-term advantage if they can create a reliable and convenient charging network.
And, of course, they're trying to leverage any government support and incentives they can get for EVs.
Absolutely. Government policies can play a big role in promoting EV adoption.
But their competitors aren't sitting idly by either.
No, they're not. Uber is making a big push into EVs with partnerships to bring thousands of them onto their platform by 2026.
And Ola's driver-owned EV model presents a different kind of challenge.
It does. It avoids those leasing headaches that BluSmart is facing.
So the EV ride-hailing market in India is definitely heating up.
It is, and it's going to be fascinating to see how it all plays out.
Now, we have to talk about this deal with Refex Industries that fell apart. It was a pretty significant development.
It was, and it really adds another layer of complexity to the whole BluSmart and Gensol saga.
Refex, through its subsidiary Refex Green Mobility, was supposed to buy almost 3,000 EVs from Gensol.
It was a big deal for Gensol. They desperately needed the cash to reduce their debt.
And for BluSmart, it was a chance to get a large batch of new vehicles for their expansion plans.
But in the end, it all fell apart.
It did. They officially said it was because of evolving commitments on both sides.
Right. Basically, they couldn't agree on the terms and timing of the deal.
This cancellation was a huge blow to Gensol. It wiped out a major opportunity to address their debt problem.
It did, and for BluSmart, it means they're out those 3,000 vehicles, which would have been about 35% of their total fleet.
They were really counting on those vehicles to fuel their growth.
They were, and now they have to find another way to get them, and it's not clear if they can, especially with Gensol's financial problems.
Plus, Refex was going to lease those vehicles to BluSmart after buying them, so that potential partnership is gone too.
It is, and now there were reports that Refex might team up with Uber instead.
Which would be a double whammy for BluSmart.
They'd lose out on vehicles and potentially strengthen their biggest competitor.
So the collapse of this Refex deal has some really serious long-term implications for BluSmart.
It does. It makes their future even more uncertain.
Okay, so taking all of this into account, the corporate governance issues, the financial struggles, the operational challenges, the intense competition, what are some of the possible outcomes for BluSmart?
It's hard to say for sure, but industry experts are talking about a few different scenarios.
Like what?
One possibility is a distressed acquisition, where a bigger player like Tata or Reliance buys BluSmart at a bargain price.
Okay, so they essentially get scooped up because they're in a vulnerable position.
Exactly. The buyer might be interested in their charging infrastructure or their existing market share, even if it's small.
Another possibility is bankruptcy, if they can't turn things around financially.
Right. If their revenue doesn't grow significantly and they keep burning through cash, they might not be able to survive.
And then there's the option of pivoting to a B2B fleet management model.
That's interesting. They could use their existing charging infrastructure to service corporate clients instead of focusing on individual riders.
But that would still require a lot of capital to get off the ground.
It would. They'd need to invest in a whole new set of capabilities.
And on top of all this, we've seen some key people leaving the company recently.
We have several top executives have resigned, including the CEO, the CBO, the CTO, and a VP.
That's a lot of brain drain in a short period of time.
It is, and it's usually not a good sign when that happens.
It suggests there might be deeper problems within the company.
Right. It can create instability and make it harder to attract and retain talent.
And they're still trying to raise $50 million in new funding while already carrying a lot of debt, over $80 million, according to reports.
So they're walking a financial tightrope.
All things considered, the outlook for BluSmart is not looking very bright right now.
It's not the general consensus among experts is that their chances of making it past 2025 are slim unless they make some major changes and get a big influx of cash.
So as we wrap up this deep dive into BluSmart, it's clear that they're facing a perfect storm of challenges.
They are on multiple fronts.
We've talked about the complicated relationship with Gensol, their ongoing struggles with profitability, the massive amounts of capital they need, the limitations on their growth, and the complexities of their sustainability claims.
It's a lot to overcome.
It really makes you think about the broader future of EV ride-hailing in India.
It does. Are BluSmart's problems unique to them, or are they signs of bigger challenges for the whole industry?
It's a good question, and it highlights the tough balancing act these companies have to manage.
Between ambitious growth, financial stability, and the practical realities of building a sustainable business.
It's a fascinating case study, and it raises a lot of important questions about the future of transportation.
It does, and it'll be interesting to see how the competition between these new EV-focused services and the traditional ride-hailing giants evolves.
And the role of charging infrastructure is going to be crucial.
Absolutely. It's the backbone of the entire EV ecosystem.
Thanks for joining us on this deep dive into the world of BluSmart.
It's been a wild ride.
It has, and we'll be keeping a close eye on how this story unfolds in the months to come.
It's one to watch for sure.
It is. Thanks again for listening.
See you next time.